All right. Welcome, everyone. How are we doing? The energy for today?
Yeah.
Let's go. Yeah, very excited. Second Hyperliquid panel of the day. And we're going to talk about HIP-3. Who in the audience is aware of HIP-3? Maybe just raise your hands. All right. So let's start with an introduction of first yourselves and what you're doing, and then we'll go into HIP-3. So yeah, let's just get started. Jason, maybe just a few words, who you are, what you do, and especially how you're involved in the Hyperliquid ecosystem.
Yeah, absolutely. So I'm Jason. I'm head of business development at Silhouette. And Silhouette is building a privacy and compliance layer on top of Hyperliquid with the goal of creating the best possible execution environment for any size trader.
Hi everyone, Marcin here. I'm a co-founder at RedStone. We are the fastest growing blockchain oracle on the market. We recently launched HyperStone, which is a dedicated oracle infrastructure for launching HIP-3 markets. That is live in production, for example, with Felix, and new markets are coming. And I'm very passionate about the Hyperliquid ecosystem. I've been there fairly early on. I do believe it's like one of the futures for the on-chain finance expansion into the mass adoption. Excited about the panel.
What's up, everyone? Nice to meet you. I'm Nayan. I work on the strategic opportunities desk at Galaxy Digital. Galaxy is a behemoth in the institutional crypto space, spanning everything from ventures, investment banking, to trading and OTC services. I spend most of my time on the staking team as well as helping out DeFi and venture, and we do a lot in the Hyperliquid ecosystem across the EVM core, as well as running a validator.
Awesome. Yeah, my name is Mirko. I'm CEO and co-founder of StakeModes, and we also launched the Looping Collective recently, which is an automated looping trade on Hype. So we're also very active and involved in the Hyperliquid ecosystem. Also very bullish on the whole space and very excited about HIP-3. So I want to get started, just a general introduction of what HIP-3 actually is. Jason, do you want to give the audience the intro to HIP-3 and which role does HIP-3 play in the Hyperliquid ecosystem?
Yeah, I think the simplest way of putting it is that it allows anyone from anywhere to create a perpetual market on top of Hyperliquid using a lot of the same mechanics and using some of the same liquidity, which opens up many, many doors for different teams to onboard pre-IPO trading, commodities, equities, things of this nature. And because of builder codes and some of the other infrastructure in Hyperliquid, it also allows people to not only create a market, but then get instant distribution to different sort of front ends and users right off the bat.
And today there are around 3 HIP-3 market deployers live. And maybe you can give an intro to the, how did HIP-3 launch and who are the deployers today and what's the landscape?
Yeah, so there's 3 main ones. There's a few other ones that have announced. So Trade.xyz, which is with the team behind Unit. They're onboarding a lot of different equities. You have Felix, which is a CDP protocol on top of HyperEVM, and they launched an equity market as well. And then you have Ventuals, which is pre-IPO. There are some others that have announced. So for example, Athena announced their market. That's going to be HIP-3 as well. And each one is kind of targeting different things. You can adjust fees, you can adjust quote assets, but these teams they're 3 strong teams, and so they see if the future is onboarding all of finance, this is a natural progression in the next step of Hyperliquid for that.
How do you think about the distribution of HIP-3? It's I think it's. In the beginning, the Hyperliquid frontend didn't integrate any HIP-3 or didn't say they want to integrate any HIP-3 markets. Now they do. They're basically listing all the HIP-3 markets there, which I think is a great decision. But obviously, Hyperliquid also has the famous builder codes, which Phantom Wallet integrated, and basically all the wallets in crypto are integrating Hyperliquid builder codes right now. Marcin, what do you think on the distribution of HIP-3, and do you think HIP-3 markets will basically bring any type of perk market into any type of wallet, and how do the distribution rails actually look like?
Yeah, that's a really good question. And I also agree that the decision to integrate HIP-3 markets into the core front end was crucial, but it's definitely not stifling the expansion of the Builder's Code. Phantom, since the launch of code, I believe, did already 15 billion in volume, and it's been like 3-4 months around. So it's like tremendous adoption. As we progress, I believe it's going to be free as this toolbox that you can utilize, and those builders codes as abstraction layer for the normies to go easier and easier for the experience. For example, Liquid is going to allow like people to tap in with Apple Pay. So a lot of the complexities of getting into the Hyperliquid ecosystem and having the exposure for perps is going to be abstracted away. So this is essentially like the progression you do for the broad adoption. I can imagine Revolut or other regular fintechs to also integrate it at a particular moment, because you get the best out of the liquidity and the order book that Hyperliquid created, like the engine, like the absolute fundament, and then you just put like layers on top to make it easier for the broader ecosystem to implement. And interestingly enough, you can have various deployers with the same HIP-3 market. So an example right now, there is Unit with Tesla stock and Felix with Tesla stock. So there's going to be also very interesting, let's call it a battle between them in terms of the efficiency of the market. Over here, we have to remember about the native stablecoin of Hyperliquid, which is USDH, that was won by native markets. I'm not sure if everyone is familiar, but there was like this big proposal period where people like Etina, Paxos, Circle was even quoted to be interested in getting it. We're putting proposals in, and then a native team, native markets, won the ticker. And if you're utilizing that USDH in the market, you're getting 20% lower taker fees and also 50% rebates on maker fees. And from the very beginning, it might look insignificant, but if you talk about the whales and billions of dollars in volume, that adds up. And this is where, for example, Felix came in very interestingly, because Felix used Hyperstone, our product, as an oracle. So we powered those stock perpetual trades right now on Felix for Tesla stock and soon more, and indexes and so on. And throughout this efficiency of lower fees, you can attract more and more users that are specialists in that particular market. But the builder codes, I believe it's more towards, let's say, the mass adoption, right? So you have those two things that will go in parallel, so increasing the efficiency for the pros and making it easier for the regular market to interact and go on.
How do you think the competition between different perp markets or like different quote assets is going to play out, and how is Phantom Wallet going to decide which quoted asset, like which Tesla they integrate in their front end?
Well, at the end of the day, it's going to be about liquidity, right, and efficiency, because, okay, at a random moment you can trade, but the most important is when there's a market stress and everyone wants to actually like close or create a position, like which one is the most liquid and offers the best book. And in my opinion, this fundamental advantage that USDH is giving is going to be tremendously important over the long term, because you just, from the very beginning, you just get a better math on those markets. So this is going to be important, but also go to market, attracting market makers and big players to deposit into those books and being present, not withdrawing when there is like a big market stress in terms of the maker orders are going to be also important ones. So yeah, there is like a number of verticals that will define it, but the more the merrier, in the sense that there should be probably like some sort of competition, and then we are going to have the most efficient markets.
And then do you think builder codes and HIP-3 will basically be integrated in every neobank, every kind of financial application in the world? Like, is this like perpifying everywhere, basically, or like?
Well, eventually, probably yes, but we need to get there step by step. We've seen with, for example, Jelly Jelly or recently Popcat, both of the examples of moments where markets were tried to be manipulated with, for example, meme coins. So in my opinion, at least, that's my personal take as an oracle, because we take a lot of stress on us as an oracle to ensure the market is priced accurately and the manipulation is not going to occur, is that not every asset is designed to be a perp. Like a meme coin in itself is almost a perp because it's so volatile, right? But when we are talking about huge assets, as mentioned earlier, like indices, stocks, bonds, commodities, those markets in TradFi are already huge, and bringing them on-chain is going to bring a lot of advantages, right? So those are the ones that I believe are going to be eventually integrated in those retail-facing applications, as you mentioned, Revolut. I can imagine a person playing perp on, let's call it commodities or gold or Tesla stock. Right now, you can play on Tesla. Why not to add like the perp on Tesla that will be powered with HIP-3 and builder codes over there?
Nayan, curious, from your perspective, from the institutional side with Galaxy, like, do you see demand from the institutional side for the perps, also for HIP-3 perps, and also like, yeah, what demand is there for which type of assets? Yeah.
Yeah, I think it's a really good question. From the institutional side, there definitely is demand, although right now I think it's very wary, the demand. I think there is a lot of, you know, blockers from a compliance perspective a lot of the time. Some of these assets, especially for US regulated entity, are much harder to trade than you'd expect. So a lot of these things over time might get taken out, and you know that will bring more institutions on chain. But I think in the, you know, the question of what do people want is you kind of have to take a look at the user base of Hyperliquid, right? And I think it's very defined as like a risk-on environment. User surveys that, you know, we've conducted with some partners have like told us like people want like access to risk in an easy format. And what does that mean for HIP-3 is it kind of destroys all the infrastructure requirements for anyone to bring up their own exchange. And so what you can do now is you can focus, if you have an idea, on a super interesting asset like Kurt was talking about, Pokemon cards on chain. Anything that you have an idea that people want to trade can theoretically exist. And I think that brings out some really interesting things, but it really is, what do people want? Like, I think, you know, people have talked about FX, right? I think FX might not be the most interesting market because the FX is a super liquid market in traditional finance and is very efficient. Trying to bring that on chain makes it, the spreads a lot wider, much more inefficient to start. I think there might be a path for it in the future, but integrating in a Hyperliquid where people that want risk trade might not be the easiest thing. You might kind of believe that, oh, this is a huge market, but the users on Hyperliquid might not want to actually trade that because they want to trade Tesla or NVIDIA. So I think, you know, being honest on what HIP-3 markets user base you're serving is very important.
Yeah, I'm very curious if HIP-3 will actually unlock new traded assets like Pokemon cards. They've never been traded at all, like kind of on a grand scale. So I do wonder if HIP-3 is just basically migrating like the traditional trading of like stocks and so on chain, or if it actually enables new use cases like the Pokemon cards. It's very cool, but is it really like, do you think this is like HIP-3 can really enable new markets like this, or is it just a nice gimmick and it's kind of fun and crypto is a bit crazy, so it's happening, or like can this really be like a big, or can this unlock new institutional use cases actually?
Yeah, I think it's a very funny question. It's pretty fascinating to think about, right? As someone who has spent multiple years in Reddit marketplaces, trading and market making like random esoteric assets, like keyboards that you type on, there's markets for people to trade these things. Like people will trade. Like there's people that make Pokemon cards on the markets, right? People that market make Labubus. There's people that market make keyboards. Like there are people that do these things. The question is, will these people ever go to Hyperliquid, right? And that's what HIP-3 enables you to do is, okay, I believe that I can unlock the distribution to get the people that already do this to trade it. I think the bigger question is, these people, you have to do a lot more work to get financial primitives around this, right? You need to get market makers on board to have depth. Like a lot of these things are very illiquid assets that also in OTC fashion versus a very highly levered liquid perp that is constantly moving. And so these things enable like much harder liquidity requirements, and like liquidity requirements that are present for your own spot stable are very deep. Like so the trade-off is like there is a lot of startup costs in the market. Getting 500,000 hype is not an easy task immediately to source that, right? That's a lot of capital requirement. So unless it's kind of like an opportunity cost of like, do you think that the market that you're going to bring is worth the opportunity cost, and you might try. And I'm hopeful is what I think I'm getting at, that there will be new financial primitives enabled because of this that allows people to move through different risk profiles very easily on this one unified platform. But I think it does, and it will take time, and it will take a lot of user-focused development to do that.
any HIP-3 use case you think will come up?
My perspective, there is something that sparks your eye, and there is something that is going to sustain over there and create something efficient over long term. And but majority of the times there are two separate places. Pokemon fingers something that is going to be very, very sustainable, especially when we see the first market crash, you know, liquidity dries. We've seen it with NFTs and many other like eras, like decentralized, or you know, like many other assets that everyone can trade, because technically you can trade everything. Whether this trading is going to sustain is another question. I'm a big believer of efficiency, and Hyperliquid is bringing just that, especially with those kind of greedy when you use. Maybe I'm going to come back for a moment. Now you pay at the, because liquid, if you do well, at the lowest tier, it's about 9 bips right now on a bucks in your pocket, right? And players that are going to trade hundreds of millions, if not dollars, that's right. And then we are talking about going to be important. And this is where I believe those stock markets, the very well-established traditional markets coming on chain, are going to be the most important. And also in this one place that is omnibus, in a sense that you have the American stocks, the Chinese stocks, you have the indices from Europe, so the hub that you can trade everything that matters with deep liquidity and with serious players being around, not like something that when the first liquidity crunch comes in, people just go away, right? So I'm a more of a believer of those fundamentally sound assets to trade rather than really fancy ones. But maybe we're going to see them as well.
Yeah, I think there's a few different buckets, right? There is data, like pricing. So for example, Ventuals is doing pre-IPO. So it's like, how do you price that? That's a big sort of like hurdle. There's also, like with the Pokemon cards, you have to actually have Pokemon cards to be able to, that's also unique pricing, right? Because it's illiquid markets, and maybe a Charizard costs something over here and a Charizard costs something over there. And then I think another part of it is distribution, and then the other part is demand. So for distribution, so for example, Unit launches a market. I get a notification on my phone that Phantom is saying, oh, you can now leverage long Apple or whatever it was, right? That's pretty impressive. Now, if you think about it, that like analogous to what maybe like 5-10 years ago was I don't remember when Robinhood came out, but think about Robinhood, right, where it sort of reduced the hurdle rate for people to kind of get into trading. This was around 2021, if you will. People were able to just go and buy GameStop. They were able to sort of like start trading when this was not necessarily an easy thing for people to get into, and now everyone can kind of take a part of it in a very easy, simple onboarding way. HIP-3 will have that sort of same effect, but it's heavily dependent upon demand. So if you look on chain, most equities and even FX, there's not a ton of activity. FX less so, and a lot of it's just sort of like market making deals to make it seem like there's volume and activity going on. But these markets the users are entrenched in different sort of categories. FX, you know, these are large traders on interbank rates. They don't go on chain. They'll probably never go on chain. They need like compliance, things like that. There's a liquidity issue there as well. And then you think about, you know, commodities, right? If you're a commodities trader, are you going to trade on Fidelity? Or are you going to trade on Ostium? Or are you going to set up a Phantom wallet to trade? Like, why would you do that? Why would you go through that process? So I think part of it is, it's this sort of initial bootstrapping period where a lot of these variables need to play well together at the right time in the right way to sort of unlock a first proof of success. And if they can form this proof of success, like maybe trade.xyz does this or what have you, and somebody can point to them and say, oh, look, trade.xyz has whatever billions of dollars in volume week over week, or Felix is very successful, or Ventuals is very successful, you know, whatever, then people will trade. Because if you think about the onboarding of the success of the Robinhoods or the eToros or the whatever of the world, which was not that long ago, a lot of it was, oh, I traded XYZ stock on Robinhood and made 1,000x or something, and then they go on Reddit, and then everyone's like, oh my God, I also want to make 1,000x. How do I do that? And then so it's becoming this snowball effect. And so you need a lot of these variables to play to create a really good proof of concept or proof of success. And then I think you can onboard more people. But it's still the same, I think there's still always going to be sort of like this UX hurdle rate of getting people on Web3. And a lot of people are tackling this, you know, privy and what have you. So I think it's the right direction. I want to just be rooted in pragmatism. And so I think there's a lot of really good teams behind this. RedStone is behind this. There's good market makers behind this. People are betting on this. So I think we're moving in the right direction. We need this. But we need to sort of watch how sort of the chips fall, so to speak.
I do agree. I think it's still relatively early, even though there's like super exciting new use cases. It needs to build up some track record over time.
Yeah.
And that's also bring us to the next topic on like risk, actually. So usually for like adoption curve of new technologies, there's like you have a slow adoption, and then sometimes there's like, well, at least in crypto, like there's some have Black Swan events, you have the Black Fridays and so on, and then like the industry consolidates a bit and rebuilds, and like it keeps growing and consolidates. Like there are these cycles, right? Do you think there will be something similar on HIP-3, where like maybe we will see a Black Swan at some point? Is that kind of something we have to worry about, especially when we're still in this experimentation phase, right? What are the risks on HIP-3, and is it going to blow off potentially, or what do you think?
I'll go, and I think Marcin should definitely chat about this because his company is really critical in this. But if you look at the recent rinse from the tariffs from Trump's announcement, or the tariff announcement, there was this massive liquidation. And so people are like, oh, this is the biggest liquidation and bigger than FTX. But a lot of it was just leverage. It was just massive leveraged perp positions. So I am fairly confident that there will be moments where the markets will get rinsed out one way or the other, and there will be liquidations, and people will lose money, for sure. And it just happens with nascent markets, period. From Silhouette's side of things, a lot of what we help out with is more on the compliance side of things. So if markets want to come in and they want to have, I don't know, black labeling, white labeling, or they want to have compliance in terms of market making or bootstrapping or onboarding, just like he explained earlier around having onboarding institutions, that's really Silhouette's goal, is to bring more of these markets on chain in a compliant and safe manner so that we can have better execution environment, not only for large traders, but also for institutions. But I do strongly believe that because these markets are rooted in leverage, remember it's not spot if we're talking strictly HIP-3, so therefore people are going to gamble. And when they leverage, they're going to take on risk. The system has to go through that stress. But I want to leave it to Marcin as well, because like there's a huge part of it in terms of pricing. And pricing is super important for a lot of those events.
Yeah, we feel stress. That I can tell you. You know, HIP-3 is a new thing, right? New technology, something that we are just scratching the surface of. And there's a huge urge from the market to go YOLO. Like, yay, we go with many markets, we go with many price feeds, we go with as much as we can. But this is like also a recipe for potentially burning your fingers. On recent liquidations on 10th of October, one of the big issues over there was that, for example, Binance priced USDE, the stablecoin from Ethina, at 61 cents for a moment. And that helped to liquidate some of the positions very effectively. Whether the coin traded at 60 cents or not, well, in our pricing methodology, we were the lowest at 98 cents, for example, because we aggregated from plenty of sources. So it really matters like what is your engine in a sense, and an Oracle is like the very heart of it. So when we were launching the HIP-3 with Felix, we were supposed to launch it a bit earlier even, like I believe a week earlier, but we just wanted to make sure we do it right. And we also set like caps on open interest, and we consistently right now hit the caps. I believe we improve them, like put it higher every 24 hours, so that we do this evolution like step by step, as you mentioned, so that we don't get this very bad liquidation event even before we properly start and get like a distribution. There's also slashing involved. So for people that are not familiar, in order to create a market on HIP-3, You need to decide the assets. You need to decide the oracle that is going to settle the assets. But you also have to have 500,000 HIP as stake. That's quite a lot of money. So if you're going to have like a bigger mistake on the market, there can be also slashing involved. We haven't seen it yet. We are going to see how it's going to evolve in practice. As RedStone, our most important metric is reliability. We deliver price feeds to on-chain environment of Hyperliquid the fastest possible, which is 2 seconds. They don't allow you to deliver it faster. And we ensure that our pipeline is absolutely robust. In the history of RedStone, we've had 0 downtime or mispricing events. And this is how we qualify for this kind of markets. But there are also other players that want to go a bit more aggressive. So we are going to see how it's going to look like. Because on the core, hypercore, we did see Jelly Jelly, Popcat, and those kind of events. So there is potential risk involved.
On the oracles, actually, because we talked about trading Pokemon cards, Pokemon card perps on chain, like how would you price that at all? Like, and like, how do you provide an oracle for something like this? Have you looked into that? Or like, I mean, even for like ventures that do pre-IPO trading of like SpaceX, it's not a publicly traded company. Like, how do you price that? And that's also immense risk, right? Because there's no public market liquidity beyond this perp market then.
Exactly. So there is a couple of buckets there. The first one that we explore right now and actively implement is the stock market over hours during the week. So 5 days, Monday, Friday. And then you have also the weekend hours, right? So how it trades over the weekend. And we have a methodology for both of those right now. So it's essentially looking what's happening on the actual market with places where people trade. Then the Pokemon cards, this is a bit of a different story because it's a new asset. It is also very exposed to volatile directional moves, so it can drop 80% potentially, right? Like if people just lose faith in it, like Tesla stock is not going to drop 80% most likely, right? Like even if there's like a blow up of a factory, it can take a haircut, but not like necessarily that much. So we are rather on the safer side of the deployments. That's the reason we don't do those Pokemon cards quite yet. But I can tell you that in the background, we are talking with a number of teams to define those kind of logics. Because at the end of the day, the deployer, so Felix, for example, has to understand how the Oracle prices it, and in the moment of stress, how it's going to behave, so that their system is also like adequately configured, that the both of those essentially parts work in sync with each other.
Awesome. So we are almost out of time, just 2 minutes. I want to close off the session about the Hyperliquid vision itself. Like it's to bring all of finance on chain, and HIP-3 is obviously helping to realize that vision. And I wonder, can HIP-3 and Hyperliquid really be the place where the world aligns on, okay, this is the place of the deepest liquidity, and like it's like where the most liquidity is, like they're the most efficient market. So essentially, like, could Hyperliquid and HIP-3 be a black hole sucking in all the liquidity from everywhere across the world and like all institutions? Do you believe in that vision? Do you see that? And what's your take on it for all 3 of you?
Do you want to go?
Sure. Okay.
Yeah.
You know, as they say, liquidity begets liquidity. I think Hyperliquid has done a phenomenal job over the last like year and a half, becoming like 20% of Binance OI and like volume, and showing that it can really compete at like the highest levels of exchanges. And that's not, you know, that's not an easy feat by any means. I think it's interesting to say, like, will Hyperliquid be the thing forever? No one knows. You know, we believe these things in every cycle with, you know, GMX, Avo. There are so many projects that have done the perps thing. Hyperliquid is probably one of them that has done it the best by far. And so, yeah, I think liquidity begets liquidity. The deepest liquidity invites more users because they want to trade with the lowest fees, lowest slippage, and I think that's like a big thing. So maybe, I hope, but you never know in however long.
I was fortunate enough to meet Jeff for a moment, for quite a bit in Korea and talk with him, and he's a visionary. And he as his team are extremely smart and equipped to deliver such a vision. And I believe they play it also in a very smart way in terms of the hype as the token, the staking, and it's playing in HIP-3, the HIP-3 itself, Hyper EVM. So they are truly like creating a snowball to make sure that it's going to happen. And whether it's going to be this ultimate solution, I don't know. Whether it has the potential, for sure, and I'm extremely bullish on the months to come because I see just the quality of people that are over there and how much flexibility also the core Hyperliquid team gives to the builders that want to stick around, sit on this liquidity, and ensure that it's just the most efficient place to trade, at least for a given moment.
Yeah, I think to kind of piggyback off of what Marcin's saying, I think like Jeff, one of the things that's really great about the team is that they're really quite unbothered by a lot of other things, like other opinions. They're very sort of focused on trying to deliver a very good product in the best way that they feel possible, which is not necessarily always the same for a lot of founders or builders. The market is heating up in terms of competition. You have other protocols launching and other teams trying to come for a lot of the success that they've made. However, they've created a system that has sort of fostered this organic community, which is actually quite rare. Most chains have to either pay a lot, or even chains that are very hyped don't really have that amount of organic builders or organic interest in the ecosystem. Some people might say there's not a lot of activity going on, but if you look at it very realistically across the board, it's actually quite surprising to see that many people so interested in building something there, and that are very interested in genuine in terms of their intent, rather than just trying sort of be this ephemeral sort of flash in the pan. I think HIP-1 and HIP-3 are the natural progression towards onboarding more liquidity. I do think ultimately, as it always is with open markets, there's always going to be different venues for different things, and there's going to be people trading in different areas. But I think Hyperliquid has really set a very nice foundation for creating more adoption, more of a permissionless layer to create and onboard more financial primitives on-chain, and then be able to distribute that in a very meaningful way to a lot of builders and users all across the world. There's still a ton to be built. There's still a lot of different verticals that need to sort of happen on top of Hyperliquid. But I think they've done an amazing job at sort of the first iteration, the first sort of creating the nice foundation to kind of build on top of. So we'll see, I hope. They're a very good team. The people in the ecosystem are very nice, but we'll see ultimately at the end of the day.
Awesome. Yeah, I agree. I think it's a truly special ecosystem. And also, like, the whole team, everyone is extremely humble and just executing heads on. And it has a lot of traction, so it speaks for itself. But I think as we discussed today, like, the job's not done. So there's a lot to do, especially for HIP-3. And that being said, thank you very much for being on the panel. Let's give a big round of applause.
And we have to finish with one word. Hyperliquid.
Hyperliquid.